This podcast is sponsored by the Fargo-Moorhead West Fargo Chamber of Commerce. The Chamber is a catalyst for growth and prosperity and is here to protect and promote business, inspire innovation, cultivate communities, and influence action. Learn more at fmwfchamber.com.
Hello there, everyone. Thanks for listening once again to the In-Forum Business Beat podcast. This is your host, Thomas Evanella. Last week, the Fargo-Moorhead West Fargo Chamber of Commerce hosted its annual Midwest Economic Outlook Summit. The event featured numerous speakers and panels focusing on all things economics. Among the highlights, experts focused on interest rates, inflation, and housing issues. For a full refresher on the event, you can find reporter Helmut Schmidt's story on inforum.com/business. Here on the podcast, we wanted to dive back in and discuss what this all means for the world of agriculture, which, as we all know, is North Dakota's most prominent industry. To help me discuss this topic, I'll be visiting with Randy Martinson, the founder of Martinson Ag Risk Management. Randy was among the speakers at last week's summit, exploring the challenges producers are facing today. So with all that said, I'll turn it over to my interview with Randy. Randy, thank you so much for joining me today. How are you doing this afternoon?
I'm doing well. You know, sun is shining, so it's a good day.
Absolutely. And Randy, for the audience, just tell us a little bit about yourself, your background, and what your company does.
The company, Martinson Ag Risk Management, what we do is we help farmers manage risk. We do that by, selling and offering crop insurance. And we also do futures and options trading. We also do an advisory where we help farmers sell their grain throughout the year. So we kind of combine all that together as what we call a risk management package to help producers basically help them operate run their operations as efficiently as they can and try to capture as much in the marketplace as possible.
And Randy, you were one of the speakers at the Chamber's 2023 Midwest Economic Outlook Summit. So tell us then, in 2023, what does the typical day in the ag risk management world look like?
Boy, I tell you, that's a big question because there's nothing typical anymore. We've got so many different black swans that have taken place that have driven this market, to basically being our third year in a bull market, which is something we normally don't see or have seen in the past. So we're looking at things as far as, just the U.S., the world. I mean, as far as ag is concerned, the world is now our platform. We have to worry more about what's going on in Russia, Ukraine, Brazil, Argentina, just as much as we need to worry about what's going on in Kansas or North Dakota.
And so you mentioned these sort of black swan events. What are some of the challenges that farmers and producers are facing today, and where do you see these issues coming from? It feels to me that a lot of this traces back to the pandemic, but is that your read on the situation?
Oh, I think you're right. I mean, that's where things kind of go back to, and then it's kind of the cause and effect since that. One of them is, logistics and the supply chain, how that got broken up, and it created a difficulty in moving product. And one thing about agriculture is that, we buy retail, we sell wholesale. So, I mean, we're, moving product into the market all the time, but we're also getting product to raise the crop, the inputs and machinery. All those have gone up and they've become become a little bit tighter supply because of COVID restrictions and the plants not working. So there's a lot less machinery. There was shortage on the inputs, fertilizers, chemicals. So all that kind of tightened up things and it created lower production, the expectation of lower production. You throw in the war with Ukraine, with Russia, then all of a sudden you take more product off of the world market. And throw in weather in there a little bit too, and you have yourselves makings of a pretty good story as far as the egg market is concerned.
And tell us about the global marketplace. When we're looking at farmers here in North Dakota or in Minnesota as well, who are they really up against? You mentioned a few other countries. How does our area stack up against these other countries?
Well, I mean, the big part is that, the U.S. used to be the leader or the world's leader in exports for all the commodities. We're no longer that. We have now taken second fiddle. But, when we look at what we raise, we can't consume everything we produce in the U.S. Wheat is what we call an export dependent market, which means we need to export somewhere between 30 to 50% of what we produce in the U.S. Corn, we don't have to export that much. We use most of that domestically with feed for our animals and then ethanol. And then soybeans is an export dependent market. We have to export, again, somewhere between 30 to 50%. Well, all of a sudden, Russia and the Ukraine have become the strongest competitors for us as far as the wheat market is concerned. In the 70s, we were the leader in exports. Now we're somewhere down around fifth or sixth as far as the world is concerned. And we export about 10% we're about 10% of the world's share at this point. But Ukraine and Russia export about 30 to 35%. So you can see why that skirmish that's going on right there is kind of taking a little bit more of the focus away and kind of help drive wheat prices up here a couple of years ago. For corn and for soybeans, it's Brazil and Argentina are the big players. Brazil is the largest exporter of soybeans in the world. They are now becoming the largest exporter of corn in the world. So that's our biggest competition as far as exports are concerned. And our biggest buyers are, China, Mexico, and Canada. That's our biggest markets.
So there's a lot of macro level information there. How do you go about and translate that onto a local level here in North Dakota or for some of your individual clients?
Well, we look at what the potential, what the impact is as far as, the futures market. Now, the futures markets are traded on a U.S. basis. I mean, we've got the Chicago Board of Trade is where most of the activity takes place. Minneapolis wheat is, of course, traded in Minneapolis. But those kind of are how we set the prices or kind of dictate our biggest share of what the market that the farmer's going to get paid from. And then we watch what goes on as far as basis levels. And now that brings it more local, where that's what the elevator has to have to buy the grain from the farmer, put it in a train, and ship it to his final destination. And that's some of the big things that we watch as well. And as of late, our basis levels have tightened up because we've seen the share has gotten, or the charge has gotten to become smaller because of the need for product. Supplies have been tighter, and farmers haven't been as willing to sell, and that has helped to make it a little more advantageous to the elevators to come out and offer better basis levels. Now, right now, because we're seeing a little bit of a slowdown in our exports, because traditionally this is the time of year when Brazil starts taking the exports to China for soybeans, our basis levels have widened out. So now we're seeing that we're no longer the lead in the export market. Basis levels have widened out. So it's going to be a while before producers will be able to start moving grain back to a profitable level again.
Is it reasonable for us to expect that producers here in the U.S. might retake that top position that you mentioned earlier, or is there just simply too much competition out there across the globe?
Well, in wheat, there's a crop harvested about every month, so it's going to be tough to take that top spot as far as the wheat market is concerned. Russia will kind of dominate that, and they've kind of made that clear. And there's a few other players coming on board with India and a few other countries. For soybeans, I think that will continue to stay with Brazil. Brazil's got a vast amount of acreage that's still available that they could tear up and bring into production, into cultivation. And a lot of that not coming out of the rainforest, most of that coming out of pasture. So they have somewhere in the area of about 490 million acres of pasture, and about 2/3 of that could be tore up and farmed, which would, of course, triple the size of their farming acres as far as Brazil is concerned. So they will continue to be the leader in the soybean side of things. What's interesting, though, is that as they become more egg producing, we start to see a little bit more weather change as far as South America is concerned, as they're seeing more droughts and more concerns as far as the weather.
So when you're sitting down with one of our local clients or one of your local clients here in North Dakota, Minnesota area, What are you looking out for with them? What are the economic indicators that you're keeping an eye on, and what are some of the things that they need to be watching out for?
Well, the biggest thing is, when we sit down and try to, help them figure out what kind of a marketing plan, first you figure out what their cost of production is, what it costs them to put the crop in, and what they need to get out of that to basically survive and make it to farm another year. So that's one of the big things. Now, the market isn't always looking to give you a profit. Sometimes you have to look at just trying to, the market's job is to find the least cost provider. And sometimes you do have to sell at a loss because of that. But our job is to try to then find profitable levels or help them get to using different tools to get to profitable levels to sell their product. And that's kind of what our job is, to sit down and then figure out what direction we should go and how we should sell grain.
And there was a lot that was covered at the summit. Obviously, you touched on a lot of the agricultural topics. We also talked about inflation, housing, cost of living, all things like that. What were some of your takeaways from the summit? What did you hear or learn that maybe you hadn't heard before, and how does it apply to your industry?
Inflation is a big part of what we have to deal with, and the cost of the dollar, because that kind of sets the tone for some of our exports and also for some of the inputs that producers have to buy. What's also interesting is it sets the demand as far as the U.S. is concerned domestically. And, part of what I picked up from it is, especially from the Fannie Mae, was, we are going to continue to see interest rates increase until we start to see possibly an increase in unemployment numbers. Right now, our employment numbers remain very low, which means that people are working. People that want to work are working. We're collecting, paychecks, and they're spending that money out at the grocery stores or in the restaurants. And that tells us that inflation isn't going to slow down until we start pulling back on some of that. So it's very likely we're going to continue to see some hikes as far as interest rates are concerned. My concern on that is that it will start to slow down the consumption of higher protein sources. Beef right now is a very expensive product, and that we've got a lot of cattle ranchers that are customers. So one of the things we're watching there, because we've set in contract highs in the cattle markets because of tight supplies and the continued tightness because of the drought situation, we could start to see that market start to drift lower because domestic consumption could start to fade because of the consumer loses their job, or interest rates go up and it takes more of that disposable dollar. They're going to buy lower protein sources, and that's going to take them away from the beef more towards pork, which isn't as high, or towards poultry. So that's some of the things that we kind of watch and have to pay pretty good attention to.
So this all sort of has a cascading effect, it seems. Maybe in a broad sense, it's hard to see how something so big could have an impact locally, but you kind of see that effect, don't you?
Yeah, I see that effect. I mean, right now, the nice thing about being up here in the Northern Plains and in North Dakota, we've pretty much survived the last couple of economic downturns because of how diverse we are and isolated from some of it. This one might be a little tougher to break away because, we're looking at it impacting so much broader areas, and it's not just a housing area or just this or that. It's everything.
And Randy, I don't know if you are the type of person who likes making projections, forecasting, things like that, but I am going to ask you to do so here. How do you see the rest of the year progressing for our farmers, our livestock producers here in the area?
Well, I think we're going to have some opportunity. I mean, like I said, we've got tight supplies in all our markets or all our crops. So we're going to need to try to, secure or encourage acreage to be planted. That's been part of the trouble is with prevent plant, and because of the drought situations, we've seen lower productions. So we're going to have to encourage that. And I think this market will hold on or be able to maintain the levels that we've been trading at until we get a little bit more assured on what the South America crop's going to be. Possibly what our acres base is going to be. We'll start planting in this, they're starting to plant corn right now down in Texas. But by the time we get into the real, the bigger share of the production side, it'll be April, May. Once we get a determination of where our acres could be at, and we see weather, kind of be normal, if whatever you want to call normal, then we could start to see this second half of this calendar year be maybe a little bit tougher for agriculture.
And once again, that was Randy Martinson, the founder of Martinson Ag Risk Management, joining me on the Inforum Business Beat podcast. For reporter Helmut Schmidt's full recap of the Midwest Economic Summit, go to inforum.com/business. Randy, thank you so much for being here. Thanks for keeping an eye on this and getting us all up to speed.
Yeah, well, thank you.
That's going to do it for the Inforum Business Beat podcast. This is your host, Thomas Evanella. My thanks again to Randy Martinson for being with me today. Be sure to subscribe to this podcast and inforum.com if you don't already. We are your one-stop shop for Fargo-Moorhead business news, so make sure to check back to our website for all the latest.
Get 3 months of local news for just 99 cents a month. You'll get unlimited access to the news you need to stay engaged and connected to your community. Visit inforum.com/subscribe now to get 3 months of local news for only 99 cents a month.